Have you ever felt discouraged because your trading strategy wasn't working? And when is the right time to switch strategies? Well, we're going to go over those questions today and answer them in 3 simple steps. But first, I'm Pepper. This is Godly Trading. Thank you for watching. Be sure to watch until the end of the video where we have a special offer for you. So back to the question at hand. First thing I want you to understand is you're not alone in this. Every trader goes through this. I went through this myself. I used to jump from strategy to strategy honestly at the first sign of any sort of distress. I would say, okay, this strategy's not working. Let me go find another one. Without looking at the data. I mean, trading is data driven. You have to understand where you are and where you're going and know the numbers behind them. So step number 1 in this is look at your back testing. Your back testing is going to tell you when you're back testing. I'm sorry, you didn't. Okay, step number 0, back test. You have absolutely got to back test your strategy. Doesn't matter where it came from. Okay, I know a lot of people say, well, I saw this great strategy or I bought this great strategy and I trust the person that I got it from. Even if it was your spouse or your brother or Warren Buffett who handed you his strategy and said, I'm giving this to you and you only, you've still got to back test it. It has nothing to do with your trust in the person, right? There's a story in the Bible in Acts where Luke is talking about the Bereans who Paul had just been talking to. And he said the Bereans were more noble because they tested the scriptures to see if what Paul was saying was true. I mean, Paul's out there preaching to them, and they said, okay, Paul, I hear what you're saying. I like what you're saying, but let me just make sure that what you're saying is true. Now, that has nothing to do with Paul. That just has to do with the importance of the situation. This is very important. So the other reason you have to backtest, above and beyond its importance, is every single trader is different, and everybody's personality is different. Everyone's decision making, and I'm making obvious statements, I know, but here's what I'm trying to say. If your twin brother were to give you this strategy that he has been trading for the last 5 years, you will not get the same results because the two of you make different decisions. Everyone's personality drives their trading. So that's why, regardless of the data that someone may give you, hey, here's my backtest results. Unless this is an EA, unless this is a robot that you just click a button and it trades, right? Is anything other than that, you've got, and even in that case, you've got to test it for yourself to see how you trade that strategy. That is critically important. This strategy and these results are how someone else trades it. The two of you are never, ever going to trade exactly the same. So you cannot trust 100% their results. You've got to have your own results. We've been over it in several videos. You've got to have your own results to stand on. So step number 0 is backtest. So back to step number 1, let's look at your backtest results. What do I mean like that? Let me show you this. This is a chart of a strategy that I have used from time to time. And these are my backtest results for, I think it's about 4 years, 3 years, something like that. Now I want you to look right here, right along in here. You see this? This represents about 18 months of time. What do you see in my equity curve? It doesn't go anywhere. Your backtest results will tell you how your strategy works over time. And you may think to yourself, my strategy is not working, but you might be right here. You might be right here, ready to take off. Sadly, you might be right here, ready to go on the whole length of it. The thing that you have to remember about looking at your backtest results is that you can look at them at a glance and say, oh, okay, look where this thing ends up. Fantastic. I end up way over there. But you have to live this in real time. You actually have to live through a year of going nowhere. And you have to put yourself in your own head. It's kind of easy to do. And say, how am I going to feel at every little dip going for a year, 18 months? So the first thing you have to do is look at your backtest results and see what it is telling you. If it's saying that you can expect a 5% drawdown over the course of 3 months, if it's saying that you can expect 10 losses in a row, then go and look and see what has brought you to this point. If you had 5 losses in a row, well, fantastic. You're still within your parameters of your backtest. What I'm saying is, step number 1 is look at your backtest results to see if your strategy is telling you, hey, I am doing exactly what I'm supposed to be doing. You might not like living through this period of time, but I'm doing exactly what I said I was going to do there at the very beginning. So that is the first most critical step. Make sure that you know what success looks like and what failure looks like. Make sure you know what it looks like when your strategy is working, right? You're sitting right here. It's been a year. You made no money. Your strategy is still working. You just haven't gotten over there. Now, if your equity curve went wrong and your backtesting did not, then you know something's wrong. But step number one, look at your results. See if you just have more time to live through. Step number two, there was a Seinfeld routine where George is like, hey, it's not you, it's me. That is what you need to have a conversation with your strategy and say, is it you or is it me? So here's the hard truth, that this is in perfect conditions. This is, when you backtest, you always follow your strategy, especially if you're using some sort of automated system to do that backtest. A computer is going to follow the rules 100%. A computer is never going to break a single rule when it spits out these backtest results. You, on the other hand, when you're trading live, might not always trade your strategy 100%. You might break a rule from time to time. You're going to break a rule from time to time. I'm being a little sarcastic. So the next thing you have to ask yourself when you're saying, okay, I'm in this period of time, I don't feel like things are working, I'm in some drawdown, I've had all these string of unprofitable trades, my strategy isn't working. Your strategy might be trying its best to work, but you're getting in the way. I'm sorry. I hate to. Look, I am confession time. So I'm saying I'm preaching to the choir, as if the choir is any different than the rest of the congregation. So once upon a time, I was a day trader, not a day trader anymore, and I loved it. Don't know why, man. You don't need to go to the gym when you're a day trader. You get plenty of cardio just staring at a screen. So anyway, I had this strategy that I was trading. It was just basically a couple moving averages and a pullback. I was trading the 5-minute chart, 15-minute chart, something like that. And every day I would say, today I'm going to follow my rules. I'm going to be disciplined. And like Charlie Brown in the football and kicking it over and over again or attempting to kick it, I failed day in and day out. So I said, you know what I'm going to do? I've got a bright idea. I am going to learn to code. This was MT4. I was trading forex. I'm going to learn to code, and I'm going to take all the things that I fail at, all of the trade management, the risk management, all of those things that I am clearly unable to do on my own, and I'm going to code those things into an EA. And I'll do the manual, because I wasn't that good of a coder. I'll do all the manual decision making and entry, because I couldn't figure out how to do it in the code. I'll do all of that myself manually. And the minute I hit enter, right, then the trade manager trading robot takes over, and it's going to do all those things for me that I can't do myself. And I had two rules that I had. I had two rules that I had. I had several rules that I programmed in, but two of the rules were, that's what I'm trying to say. One of them was I closed all my trades at 5 minutes before the end of the day, and I had a maximum drawdown. If I hit a certain amount of drawdown during the day, it would automatically close all my trades. Well, I was about 4 or 5 days into this. I thought I was doing well, and I had these day trades that were not going the right direction, and I was in drawdown. I hadn't hit my max equity that day, but I didn't want to close them because, as you know, the minute you close those things, the loss is real. Until you close it, that loss is still just sort of ephemeral. It's still just open equity. It might turn around. You never know, right? Hope. Buy and hope as opposed to buy and hold. So I got the bright idea to about, so I said 5 minutes before the close of a day, my EA would close all my trades. 6 minutes before the close of a day, I hit the off button on the EA. So a robot is only as good as the on-off switch. And once I discovered that there was an off switch, that was the end of that trading discipline. So what I'm saying is that even with an automated system, it could still be you. You might still. I was clearly the problem in the situation. The strategy worked if I left it alone. I never left it alone, and I never day traded. Well, I day traded until I got to my come to Jesus moment and said, no more day trading. But anyway, you have to sit down and take a hard look, have a conversation between you and your strategy, and say, is it you or is it me? You're not doing yourself or your strategy any service by abandoning it if you are the problem. So that's a hard one to accept, but for the overwhelming majority of you out there who are feeling discouraged with your strategy, yeah, you might be the problem. Sorry. I know it's not what you want to hear. most of the time you are the problem. A great chunk of what's left of the time, the strategy is doing its thing, and you're just having to live through a period of drawdown that you probably knew was coming if you had looked. Ooh, that sounded very judgmental. I'm so sorry. I'm not trying to say that at all. So if you've gotten through step one and you say, hey, the system did not predict this, and you've got through step two and you said, it's not me, I'm trading with 100% compliance, then it actually might be time for plan B. Step number three is it's time to look at other strategies. And what I want you to have been doing this whole time is constantly be on the lookout, not even on the lookout, constantly have new strategies that you are testing that you keep sort of on the back burner. Let me tell you a little story about a guy named Bob. Bob is a coffee shop owner, all right? And Bob is happy, making plenty of money, doing well. And Bob's got a supplier that he loves. A new supplier comes up and says, hey, I can beat your current supplier and increase your bottom line 10%. Well, Bob is probably going to at least listen. Bob's not in the market for a new supplier, but he's going to at least listen to what this guy has to say. He's going to test it out. And if what the guy is saying is going to, in fact, increase his bottom line and he can prove it and test it, check all the references, run all the numbers, hey, then yes, maybe it's time to switch suppliers. But if after proving and testing it, the guy's legitimate, but it's not going to increase him that much, here's what he does. He doesn't say, hey, it's not worth the hassle for me to make a switch and have no improvement in my bottom line, but what I am going to do, I'm going to keep your card right here on the board. And if my supplier ever goes out of business or has any problem, I've got a plan B supplier right here ready to go. So what I want you to do is always be testing. So like Bob, you need to develop a system of systems. What does that mean? You need to develop a way for you to evaluate other strategies out there. Just because it says, hey, it's going to have a 5% more return per year than my current system, or it gives me an extra 10% win rate, doesn't mean it is a good fit for you. What does a good fit look like? Well, I'm glad you asked that. It's two critical questions you have to ask when you're building the system of systems and you're evaluating other strategies. Ask yourself, does this fit into my lifestyle? You have got to tailor your trading to your lifestyle, not the other way around. So ask questions like, is this going to have me trade more than normal? If I'm used to trading once a day, if I'm used to a swing trader, is this a day trading system? If I'm used to trading in the morning, is this have me trade in the evenings? Does this require me to trade more than normal? If I'm used to placing 10 trades a week, is this 10 trades a day? Does this require a different setup than I normally have, right? So I've got a computer. Let's say I'm trading from a cruise ship with my laptop, my favorite way to trade. Me and my laptop on a cruise ship. Does this mean I'm going to have two computers, or I have to have a VPS that's running all the time to run a trading algorithm? Those are the kind of things you need to say, my current system fits my lifestyle. I found it and I developed a system around my life. Does this new system, even though it might be better from a number standpoint, does it fit into my life as easily? That is the number one consideration. Number two consideration is, does it fit my trading style? If you are a trend trader, is this new strategy a reversal strategy? Vice versa. Do not fight your trading DNA. If you look at a naked chart and you see trends, don't try to pick a reversal strategy or a breakout strategy. You have to stick with what is comfortable for you. Otherwise, you are going to just be fighting your own DNA. Will I have to change my risk management? Does this new strategy cause me to risk twice as much at any one given time? Does it fit my greater account rules? Let's say that you are a member of a prop firm and they have rules of their own. Does this new strategy fit within those? So you have to look at your overall trading style and say, does this new strategy fit into that? And then evaluate, okay, it does. How much better is it? Is it worth it to me to make that switch now, or is this one just a lateral move? Well, if it's just a lateral move, then there's your plan B. There's you a strategy that you can keep in your back pocket if, in fact, your main strategy has stopped working. If it is significantly better, and only you can define what significantly better is, 5%, 10%, 1%, doesn't matter. You define what amount of improvement is worth going through the hassle of changing the entire way that you trade. So develop this system and always be testing. There's another reason that I want you to always be testing. We all have trading energy, and we want to stare at our screens. We want to be active, and that is one of the downsides to trading as human beings. Unless you've got an EA or a trading algorithm trading for you, we want to be involved. We want to be clicking buttons. And much like in step 2, sometimes we're the problem as a result of that. We have all this trading energy. So what I have found works for me is to, for lack of a better term, distract myself. Channel all of that trading energy that I would normally go into watching a swing trade. Why am I watching a swing trade? But I'll do it. Channel all that energy that would normally go into watching a swing trade. Editor, please cut that out. And believe me, the more your eyeballs are actively involved in your trade, the more your hands are going to want to be actively involved in that trade. So take all of that, I want to be active, and go over here and pour it into finding a new strategy. Hey, look, this strategy over here, I'm not going to trade it, but I'm going to take all this energy I would have been pouring into this trade, and I'm going to spend it over here. I'm going to spend it over here. I'm going to spend it over here. And what you find happens is at the end of the day or whenever your trading comes around, you're like, okay, I don't have a lot of trading energy left, so let me open my platform, let me place my trades, let me close my platform. You leave your trades alone, and your trades can go off, and your trade strategy can go off and into greener pastures and do what it's supposed to be doing free of your involvement. And also, the benefit of that is that you're constantly learning. I mean, learning is an ongoing journey in trading. You're never going to get to the end of it. As well, obviously, as the fact that at some point you're going to find a better strategy and a strategy that you can keep in your back pocket. So those are the ways that you can determine whether what you're going through now is normal, whether it's self-inflicted, or whether the market may have in fact changed. If you were a trend trader and now the markets aren't trending, if you were a versatile trader and the markets are now trending, those kinds of things. Hey, if you have found this video of value to you, please hit the like button and subscribe for me. That does help us out a lot here. Also, I would like you to put down in the comments below a simple yes or no. Have you ever traded a strategy without backtesting at first? Give me an honest yes or no. A simple yes or no will do here. Lastly, I mentioned at the beginning our special offer. If you will go down to our website, I've got the link down in the description, www.godlytrading.com, you'll see that we have a special offer from now through the end of the month for our one-on-one coaching sessions. And you can find all the information about those sessions on the website. So with that, guys, I appreciate you being here, and I'll see you all next week.